Hello and welcome. Today we are joined by Mr. Rishi Anand, the MD and CEO of Aadhar Housing Finance. Thank you so much for joining us, sir. So, to begin with, I would like to start off with a sector outlook. So, affordable housing finance is a sector that a lot of people are very bullish on, and Aadhar Housing has time and again turned out to be a top pick for many analysts. So, in this industry of high growth and demand, do you think it is possible for your growth to be above the guidance?
Sectoral outlook, I would want to say that the overall sector has been growing at about 15-17%. Now, if we carve out affordable housing from the overall sector, which is growing at about 18-19%, as far as Aadhar goes, Aadhar is the largest low-income housing finance company in the country today, with an AUM close to about 24,000-25,000 crores. And the way we look at our growth is we are going to be growing at about 21-22% AUM year-on-year basis.
Right, sir. So, possible to shoot above that?
See, everything is possible. Then you will want to compromise on certain matrices which you would, as an organization, not want to do it. I think given the industry standards, growth standards in the industry, 21-22% on a higher AUM that we are is quite a respectable number.
Right, sir. Moving on, let's talk about margins. So, margins, will they decline as you increase your leverage? Because currently you are saying AUM is very comfortable for you right now. So as your leverage increases, do you expect margins to decline?
See, Agni, today our leverage today stands at about close to 3%. The way we look at our industry, while the regulator allows your leverage to go up to 12, the overall comfort, sectoral comfort is around 4-4.5%. Are we going to cross that leverage? I don't think in the next 4-5 years we are looking at crossing those leverage numbers. Hence, our profitability numbers, NIMs numbers are going to be as they are today.
Right. Moving on, sir, have you normalized your margin numbers? Can you comment on that?
See, today we work on a NIMs of 9. The last reported NIM is 9.2%. We work on something called spreads, which is at an average of about 5.8-5.9%. Are we comfortable at these NIMs and spread numbers? We are very comfortable. And why are we comfortable is while in the declining rate trend, I'm sure that's a question coming in on the declining rate trend, how do we manage the book? Close to about 80% of my book is floating in nature. And close to 80%, precisely 80% of my borrowing, which is the liability side, is floating in nature. So whatever comes in is passed on to the consumer either ways. Hence, as an organization, we are very confident of maintaining those spreads that we work on currently.
Right, sir. And can you give us a reason as to why there is this certain amount of asset quality comfort that you have? Can you break that down for us?
See, the way asset quality goes is, if you look at our numbers for the last 3 years, we've been hovering around 1.1% GNPA numbers as of March of each year. The comfort purely comes from a perspective of the kind of consumer I am funding and the kind of loan I am funding. It is a 100% secured retail asset, and the segment that I fund to, this property or this asset becomes a very emotional quotient, right? A very high on emotions, and they're going to be making one property in their lifetime. Because the emotion quotient is so high, so probability of the consumer defaulting and losing his house is very low. So that's how the mathematics works.
Right, sir, I understand. So can you give us what the Opex growth for Aadhar will look for the next, say, 3 to 4 years?
So we should be looking at declining of Opex with efficiencies coming in. We've invested a lot in technology, so those things are going to be playing around in the coming financial year. So from a perspective, I would say anywhere between 10 to 15% drop in Opex year-on-year basis would be a good number to have.
Right, sir. So that's over a 3 to 4 year period?
Over a 3 to 4 year period.
Sir. And how about the ROA? Can you tell us what the ROA figure is looking like right now for Q4 and the sustainability on the ROA front?
I will not be able to give you some guidance on Q4. I will maybe let's talk about Q3. Q3 we closed the year at the quarter 3 at 4.4%. Is there any reason for us to fall below the current numbers? I don't think there are any reasons to fall below 4%. So we should be upward of 4% even as we go ahead.
Right, sir. And lastly, like we discussed, Blackstone still holds a reasonable stake in the company, above 70%.
That's right.
If I'm not wrong. So there is this certain sentiment in the market where the huge PE investor still being in the company. So there is an overhang about if and when or should there be an exit from the PE investor. So can you give us some perspective on to how that is likely to play out?
So Agni, while I agree with the sentiments of the market, but let me give you some good news here. See, pre-IPO, Blackstone had 98.7% holding in the company. Post-listing, it is close to 76%. The fund from where the private equity, which is Blackstone, has invested with us, has a lifetime of 10 years. And from that 10 years, close to about 5.5 years is still balance. Is Blackstone in a hurry? Are there any management discussions happening around their exit? No, they are not. So as far as the management sees, I don't think there is any reason to be worried. They are not seemingly in a hurry. Eventually, since it's a private equity fund and the way the funds work, it has to die down. The fund, equity portion has to die down. So keeping that in mind, we still have 5 years in hand. There is no hurry, seemingly hurry in the system right now. So that's the only comfort I can give to the market.
Right, so thanks for that. Last couple of questions. So how much of an impact has the February rate cut from the RBI on the margins of Aadhar?
Okay, so first of all, I think it was a very welcome move. After 5 years of gap, a rate cut came in the market. The way our liability is positioned, Agni, is out of the total liability of about 15,000 crores, close to about 10% of our liability is linked to repo rate. And the balance is linked to either 3 months, 6 months or 12 months MCLR. So whatever was linked to the repo, you get the benefit immediately. MCLR benefits comes over a period of time, I would say 1 or 2 quarters ahead as we see. The moment those benefit comes, as I told you, 80% of my book is floating, everything is going to be passed to the consumer.
So you can't quantify the margin impact?
There logically should not be any margin impact because 80% of the book is floating, right. 80% of the liability is floating, whatever comes in goes back. Yes, there will be an impact of a quarter because let's say if something comes to me today, you have to operationalize it and then it flows back to the consumer. So a benefit of a quarter you can look at a benefit of a quarter.
Right, sir. So last question. Can you highlight how the competition is building up in the housing finance industry with so many other players, and top picks are constantly being redistributed by brokerages across companies, but Aadhar again sustains one of the top places. So how is the competition playing out there?
Again, on competition, I would say, there is no new competition coming in. Everybody has been around. Everybody has created their own niche. For example, we've created a niche below 15 lakh segment and we call ourselves, or CRISIL define us as low-income housing finance companies. Companies and all the peer group, all the competitors in the low-income housing finance have been existing for good 15 years in the system. So I would not say that competition is heating up. Everybody is creating their own markets. We are today present in 22 states, with about 600 branches. The closest competitor is present in about 13-14 states with close to about 380 branches. So there is a lot of catch-up to do, and the way we think where we are, we would be in any given market, either we are number 1 or number 2, and we are 3 to 5 years ahead of competition. Right. And that's one position, is a clear direction from the board, from me to the field, that we have to maintain those positions.
Thank you. Right. Thanks, Mr. Anand. Those were all my questions. Thanks for watching.
Thank you for having me, Agni.
Thank you.